You think you're being smart. You think you're being cautious. Every time you enter the market, you tell yourself, I'll just protect my capital. I won't take unnecessary risks. I'll play it safe. And for a while, it feels good. Your heart rate stays calm. You sleep well at night. You tell yourself this is discipline. This is being a responsible trader. But here's the uncomfortable truth, and you're going to want to listen carefully because it's not something most traders ever admit. Trying to avoid losses is not safety. It's a trap. A trap that the market, or more specifically, the smart money, is waiting for you to fall into. See, the market doesn't care about your comfort. It doesn't care about your peace of mind. It doesn't reward careful, defensive traders. It rewards calculated aggression, intuition backed by evidence, and the willingness to step into risk when the probability is in your favor. But here's the twist. When you focus on not losing, your brain behaves differently. Your decisions stop being rational and start being emotional. Your comfort zone becomes your cage, and the market is designed to exploit it. Let's break it down. Imagine a trader who only enters a trade when they feel 100% sure. They have their stop losses tight. They double-check every indicator. They read every headline. They analyze every candlestick. They're careful. They're precise. They think this makes them smart. But what happens is this. They're predictable. Their fear makes them conservative. And the market, or more accurately, the institutional players, feed on predictability. They know exactly how traders like you will react. They know where you'll hesitate, where you'll panic, and where you'll exit. And every single time, that fear-driven behavior ensures you'll take small losses that add up over time. Or worse, you miss the big moves because you were too busy trying to avoid the small ones. It's called the safe trading paradox. The more you try to avoid losing, the more likely you are to lose. You're not losing because the market is unfair. You're losing because you're playing a game that your mind isn't built to win in the way you think it is. Your natural psychological patterns, fear, the need for comfort, the desire to avoid embarrassment, the compulsion to protect what you already have, these are the exact behaviors that are being exploited. Every warning about risk management and cutting losses that doesn't come with context is essentially teaching you how to stay manageable, predictable, and ultimately exploitable. Think about it. The market is made up of three types of participants: retail traders like you, institutional traders, and high-frequency algorithms. The institutions are the ones setting the stage. They create liquidity, push price into areas where they know retail traders will act emotionally, and then take the other side of your trade. Every time you hesitate, every time you overthink, every time you wait for absolute confirmation, you're stepping right into their game plan. They don't even have to cheat. They just have to understand human psychology better than you do. And that's exactly what they do. And it's not just about missing profits. The safe trading mindset keeps you in the market longer than you need to be. Every trade becomes a lesson in survival. You watch the charts for hours, looking for the perfect setup that rarely exists. You check your indicators again and again. You wait for confirmation. Meanwhile, the institutions have already moved, already profited, already left you staring at your screen, wondering why your careful trade didn't work out. And the pain is subtle, but cumulative. Small losses, small regrets, small missed opportunities. Over months and years, this adds up. Now, I'm not saying risk management is bad. Far from it. The key is understanding the difference between calculated risk and fear-driven safety. Calculated risk is strategic. It's based on probabilities, patterns, and preparation. Fear-driven safety is reactive. It's emotional. It's the difference between stepping into a trade because your plan and analysis tells you the odds are in your favor, and staying out of a trade because your gut screams don't lose. One will eventually make you money. The other will guarantee you losses. So how do you escape this paradox? How do you stop being prey to your own comfort zone? First, you need to confront your psychological biases. Write them down. Identify your triggers. When do you hesitate? When do you overanalyze? When do you exit too early or too late? Awareness is the first step. Once you see these patterns, you can start building systems that counteract them. Next, focus on probability over perfection. Stop looking for the perfect trade because it doesn't exist. Trading is not about certainty. It's about stacking the odds in your favor repeatedly over time. A 60% win rate on trades with a favorable risk-to-reward ratio will outperform a 90% win rate on trades you rarely take, but exit out of fear. This is where the math of the market beats your emotions every single time. Then build rules, not comfort zones. Set entry criteria, exit rules, and risk limits, and follow them strictly. But these rules should come from strategy, not fear. If your rules are driven by the desire to avoid losing, they are already compromised. Instead, your rules should be designed to maximize the probability of success over a series of trades, knowing full well that losses are inevitable. It's not about avoiding losses, it's about controlling them so that they don't define you. Another powerful strategy is progressive exposure. Start by deliberately taking small, calculated risks that make you slightly uncomfortable. Trade with a size or instrument that challenges your fear response but doesn't threaten your financial survival. Over time, you retrain your brain to react strategically rather than emotionally. You replace hesitation with execution. You replace fear with process. And slowly, the market stops feeling like a trap and starts feeling like a system you can navigate. Here's a psychological truth you need to internalize. Losses are part of the game. Trying to avoid them completely is not discipline. It's denial. The most successful traders embrace losses as data, as feedback, and as part of the path toward eventual profitability. They don't obsess over each loss. They manage it, learn from it, and move on. The safer you try to play, the more you guarantee losses in the long run. Ironically, stepping into risk strategically is the path to real safety, the kind that protects your capital and grows it over time. And there's one last secret that most traders never realize. The market respects decisiveness, not fear. When you enter a trade with conviction, based on your rules, your preparation, and your understanding of probabilities, you remove hesitation, second-guessing, and the emotional noise that institutions exploit. You become unpredictable. You become disciplined. You become difficult to manipulate. And that is the very definition of trading safety. So here's the takeaway. Plain and simple. Stop obsessing over avoiding losses. Stop letting fear dictate your trades. Stop seeking comfort. Instead, build a strategy that accounts for risk, take trades that meet your criteria, manage losses, and let the market reward your preparation, not your fear. The moment you treat trading as a calculated adventure rather than a defensive game, you step out of the paradox. You step out of the trap. You step into a mindset where the market can finally work for you instead of against you. Now, if you want to take this even further, you need to internalize one final principle. Consistency beats heroics. The trader who survives and thrives is not the one who never loses. It's the one who takes losses strategically, stacks wins over time, and never lets fear dictate behavior. It's not glamorous, it's not dramatic, but it works. And over time, you'll see compounding do what your fear never could. And before you go, remember, the market isn't designed to punish you for being wrong. It punishes you for being human. But understanding your psychology, building your systems, and executing with discipline turns that human weakness into an edge. It's not magic. It's not luck. It's strategy, backed by self-awareness and execution. If you're serious about breaking out of the safe trading trap, start today. Review your past trades. Identify the fear-driven decisions. Write down your rules, and begin to take calculated risks that challenge your comfort zone. Over time, the results will speak for themselves. If you found this video valuable, make sure to hit that like button, leave a comment sharing your experiences with safe trading, and subscribe so you don't miss the next deep dive into market psychology. We've got more videos breaking down the hidden behaviors, manipulations, and strategies that the market doesn't want retail traders to know. Watch the other videos on this channel to understand exactly how the market exploits human behavior and what you can do to turn the tables in your favor. Remember, trading is a journey of understanding, not just the charts, but yourself. The moment you step out of fear and into calculated action, that's the moment you stop being prey and start being the hunter. And that, my friend, is how you break free from the safe trading paradox once and for all.